Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, May the 25th, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and hypothesis for the day. We do create multiple hypotheses in order to have a plan in place. We do not know what the market's going to do, so the only thing we can do is build plans based on what the possible reactions of the auction is going to be. That way, once the market does show us what it's doing, then we can execute the plan that suits what the market is doing, and we don't have to think about it in real time. We already have our main plans in place. We do create two main hypotheses in terms of the average true range, and then we do hypo 3 and hypo 4, which are our extension hypos. We always have to have consideration that we are going to get expansion and price discovery up or down, and we prepare for that with our alternatives. This is a subscription room. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis in the RTH session as well. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. All right, so let's talk about yesterday. Yesterday, our main hypothesis was a open auction just in range or just out of range, a rotation down to the 96 area between the 97 and a quarter and 96, and then finding initiative buyers and rotating us up and going in and making a new high. We traded so tight. We had a 4-point range all the way to 2 o'clock on the Fed news going into the minutes being released. And even on that, they only expanded it to like six points and then rotated right back again, back into the balance. And then finally we got the late day probe, but they didn't even break the all-time high up at 24.0450. They fell short at 24.04. This was a very tough trading day. It was actually the news. I got down early in the day, and then I worked my way out, and it was the news. I actually traded the gold on the news. It was the bigger mover, and that basically made my day. Now, this almost played out as hypo 3 for most of the day. Then, interesting enough, we get into the Globex session, and what do? They get into that sideways pattern again, and then they rip it. And we go up, we complete the rule of 10. Peter and I also traded this FUBAR Mr. Sneaky tech gap, and I want to show this because it's so important for you guys to understand why this trade is developed the way it is and why that primary target, okay, is the gap close, the technical gap close. And a lot of times you'll get the continuation, but what you've got to understand is that just as many times you're going to get a rejection at the 9 EMA, and then the market will continue in the direction of the impulse wave. So always remember that if you're trading the FUBAR Mr. Sneaky technical gap, that if you're down to a single, you want to take your single off here, or at least manage your stop very tightly, because you can see that in a lot of circumstances, okay, it will run. Now, a lot of times it'll keep going, and you never know which, but we always trade on the side of what? Managing our risk, taking our profits, okay, and understanding when the regular trade, the real trade is done, and that you're into bonus. So I just wanted to point that out because it's very important. So let's take a look at the news right now. Oh, come on. So we just had news at 8:30. The key being the unemployment claims was expected at 238, came in at 234, just slightly above the previous at 232. Trade balance came in slightly larger than expected, and preliminary wholesale inventories came out slightly. Well, not slightly, a lot less than expected. 10 o'clock, we've got Brainerd speaking. 10:30, we got natural gas. 12 o'clock, we've got the Canadian Council member Ludic speaking. And that's about it for news. Tomorrow, we've got core durable goods and preliminary GDP, which is going to be the big news, and then durable goods, preliminary GDP price index, and then University of Michigan consumer sentiment and expectations. So a fair amount of news tomorrow. It is a holiday weekend going into the U.S. Memorial Weekend. Don't forget that on Monday the futures are closed at noon Eastern time, so they'll open up regular hours on Sunday night and they'll trade till noon. So you've got a holiday weekend on the Friday, so be very careful tomorrow. And then we've got the short day on Monday. As for me, I'm only going to be trading today until about probably 1:30. I'm heading to a wedding up at the cottage, so I will be gone today. I'm taking my computers with me, so I'm hoping if you know I can get to good enough internet that I'll be on tomorrow morning, but I'll only be on for part of the day. You'll know because I'll get on tonight when we get to the cottage and log on. Anyway, getting back to our pre-market session. Each day I start my day with a simple candlestick chart with the 9 EMA, 20 SMA, and I'm looking to see where we are within the trend. And you can see monthly, you know, beautiful trend still intact, making new all-time highs. And I want to caution you guys, a lot of people, okay, got caught short right now. And a lot of people are going to be thinking that we're going to rotate back down to the 2400. That is a possibility, but I'm telling you right now, all the risk right now is to the upside. Okay, so don't get stubborn. If you're going to short this market up here, don't get stubborn and try to build a position short up here, because this thing can go a lot further, okay, into the 2400s before we get a counter rotation, because of the amount of people that are going to be caught short right now coming in, especially coming into the RTH session. You know, it's still so amazing that they keep making these all-time highs, these moves in the Globex. And you know, I've been talking about this for the last few weeks, that you could see that as the ATRs, the average true range, compressed, we were also starting to see a lot of activity in the Globex, and those are clues to me. Okay, and you go back and look at the videos for the last couple of weeks where I talk about the fact that you've got to recognize when you start getting better than average volume in the Globex session, that we're likely going to make the move away from balance. Anyway, beautiful upward trend, very much intact on the monthly, very much intact on the weekly, very much intact, and we're creating a bit of a technical gap. Technical gap would take us back into the 95, 96 area probably by the time we get there, but the trend is intact on the daily. On the 4-hour, very strong trend, good slope, good separation. We do have a possible foobar Mr. Sneaky setting up on the 4-hour and move back to the 9, which takes back into the 2403.75. There's a single that we left at 2404.50. from the move overnight. So that's a possible destination for a technical gap close here. But the trend itself is very, very strong on the larger time frames. As we move down, you can see that we're getting sideways consolidation. We did get a FUBAR Mr. Sneaky here that really pushed a little bit further and before it came and closed the gap. We came and tested the 20 from above, and we're bouncing. We're trying to get above the 9. So we're getting consolidation, but the trend is, although it's been challenged, it hasn't been violated with the break of the 20. Going to the 30-minute, you can see that we do have a possible shift. We've got a possible head and shoulder pattern here, okay, on the 30-minute. We are trying to hold the 9. 9 is crossed over the 20, so we are seeing the start of a possible move down, and I'd be looking at that 24.0450, and then going to the 15-minute, you can see that we started to trend down, but now we're taking it back, and we're actually in consolidation. Again, head and shoulder pattern, left shoulder, right head, right shoulder. A little bit of a inverted cup and handle here on the 15-minute. I want to take a quick look at that. This would be your rim or bottom of the cup. Come on, I hate these new, how they got the new drawing tools set up. Take the average high, take it down to the rim. It's expanded slightly beyond, but if I took it from here, so a little bit of wiggle room is here. Now if we go and look at what the possible extension is on the inverted head, inverted cup and handles, you don't take the depth of the cup, you go from the handle to the rim. A little bit of a different measurement. And look at that, it takes us to 24.0450 area, which is where that single is. So it can get violated. You know, we're still above the 9 and the 20, but it's something to consider, especially if we get back below the 9 and the 20. And just going to the 5-minute, you can see on the news. Now, sorry. You can see on the news that we've taken the downward trend back and we're starting to go into an upward trend. There's a naked cross right here at 24.09 1/4. That's right where the Globex VPOC is. So as long as we hold above the 9 and the 20 on the 5-minute, I'd be looking for that naked cross to get taken out. So just pay attention to that. So taking a look at the bigger picture. Now, I want to point this out because this is simple auction logic. You always hear about where we're trying to hold value, where we're moving to find value, whether it be prior balance or new balance, and then where we come up and accept balance, okay, to make another move. And we were in this longer time frame. Stop it. We were in this longer time frame balance from the gap up day on the February the 13th and just going sideways. Then we break out and we make this this gap up day right here. Then we gap up again. Then we create this new balance, break out of that balance, okay, the value area high was right here at 92.50, and then we try to hold balance here. They go in, they put the former all-time high in at 24.0450, then 2 days they tried to hold the balance at 98.50. They can't. We gap down, we fall out of this balance, come back into this balance. Where do we come? We come right back to the balance area between the longer time frame profile and the shorter time frame profile. They find the buyers back down there again. Then we go back up into price discovery. We break out of this balance. Okay, we accept value where it was, okay, prior, and then we come up And then in the last 2 days, if I draw a profile right here, what happens is we come up and we accept the value that we couldn't hold and we fell out of. We price discovery back up to it, we accept it, and what happens? We finally get our push up and we go into new all-time highs and we go back into price discovery. This is simple auction logic. Now, the problem we've got right now, up here, while we're in this area, we've got no profile. We've got no longer term profile. The only profile we have to gauge right now is our 24-hour, last 2 sessions to gauge because we're above, okay, prior, all-time highs. So this makes it more difficult to trade. You got less to lean against because you're dealing with lower time frames. The key, to watch today is the 24, the 2404, the range high from the prior day, and whether or not we come back into the balance from yesterday and take out the naked close at 2401.50 and the naked VPOC at 2398.50 and come back into where we just accepted that value for the breakout. That's really all we can talk about. We really have to talk about what happened overnight. Overnight inventory is 100% net long. We have a single that we left down here, and when I talk about singles, just so that you know, that's going back and using the market profile, and this is a single right here. We had double distribution overnight. We balanced out here, then we had the impulse wave up, and they spent most of their time in the upper distribution from last night. So if we spend a lot of time below the 2409, 2409.50 area, then it gives a higher probability to work our way down and test the lower side of this balance and come down and test the single and test the range high from yesterday. So, but if we get above the 2409 and we hold above that, okay, for a majority of the time, then a test to the other side of balance up to the 2412 and a takeout of the overnight high. Remember, our probabilities are 97% to take out an overnight high or an overnight low. So what's going to gauge that probability is how we trade around this 2409. So double distribution, we can start moving our numbers over. I put the single in already. I've got a trade area here. I don't know why I put that there. It shouldn't. That's from before. I want the 2407. We have our overnight VPOC, which is not likely to change at 2409.25. We have our value area high at 2410. I got to use these numbers because I've got no other longer time frame numbers to gauge myself. And then of course we've got the 1250 as the overnight high. And then above that, our daily ATR, full session ATR, is running 1538. That's a 20-period full session daily ATR. And off of the low overnight, which is down at 2401.25, our daily upside ATR target is at 2416.75. The other thing I want to point out is that we still have a measured move up to 2424.75 and 2433.20. Our weekly ATR is 20-period ATR is 3460 off of the low of the week at 2391.25. Our upside weekly ATR target we've got today and tomorrow left is still above us at 2425.75. The weekly ATR to the downside is all the way down here at 77.75. So we have to get back in below the 2400s before that will come into play. It's still within 2-day, relatively within 2-day ATR, so it's not out of the question. It'll depend on what we do today. Now, our month open is 2381. Sorry, 1538 times 2 is 3076. So 2381.50, our month open. I'm sorry, week open. Week open is 2384 and plus 3070. So 2414.75. 2414.75 is our weekly critical mass. We have 2 days left. If we get above that today, we can see some capitulation. Now this will adjust tomorrow, because then tomorrow we only have 1 day of average true range, and this critical mass will drop by 1 day's range. But for today, if we get above the 1475 and we get above the daily ATR, then you'd be seeing the possibility of the sellers capitulating and the risk, as I've been talking about, to the upside right now. Obviously, the range high from yesterday is going to be the 2400, and then targets below are going to be the overnight low and the naked close. Naked close being 2401.50, just 1 tick above the overnight low. And then the value area is valid from yesterday because we were in such balance, and that's at 2475. That prior zipper measured move, and then the target, the main target below, will be the microcomposite VPOC and the naked VPOC at the 2398.75 and 2398.50. Our daily downside ATR target is actually sitting right on top of the value area low from yesterday. So if we get back into the value area, look for the 80% destination trade. We have range capabilities to take us down there. And then 96 range low, and below that it'll all be about that 93. I don't need this anymore, so we get rid of that. It'll be about that 93, 94.75. Is it 94.75. And then 90.75, I'm not going to bother with the range high there. 90.75 is our key line in the sand. Sorry, I'm taking a long time to do this. Okay, let's get to the hypos because I'm already way... now we have a gap up. All right, and we have a substantial gap. The gap, okay, is roughly about 7 points. So my main hypothesis is a open auction. Let's get a half gap fill. Let's say we open around the 2408.50. This is approximate, okay, plus the 2401.50. Our half gap fill is 2405 approximate. And the reason I'm saying approximate is because we're not open yet. And I don't know how they're going to trade for the next 15 minutes. All right, so hypo 1, open auction, out of range. Okay, I'm looking for open auction out of range, meaning it's two-sided trading on the open, but I'm looking for responsive sellers to step in and move us down towards the half gap fill, okay, and move testing the range high, and then from somewhere between the 24 and the 2404 and 2400, I'm looking for initiative buyers to step in and move us up towards the 2410 to 2412 area and move up. That's my hypo 1. Hypo 2 is an open auction out of range, a push-up failure to take out the overnight high somewhere between the 2412 and 2410, looking for responsive sellers to step in, take us down, chop around the 2400, and then come back down into the balance from yesterday, okay, and go into the close somewhere down here in the 398.50 area and come back into balance. Hypo 3 is an open test drive, failure to close the gap and then push up, okay, take out the overnight high and then push up into the 2415 to 16 area and possibly a late day probe into the 2420s. Hypo 3 is, Hypo 4 is an open auction out of range and basically consolidating in the 2400s and chopping between the 2405 and the 2412 area and creating new balance zone as we rest. We've had basically 5 gap up days. We're going to get our 6th gap up day, and we could go sideways. And then Hypo 5, which is the alternative, is a failure to take out the overnight high and the all-time high that we put in, rotate down into the upper distribution, fail, come through down to the 96, chop around there, and close somewhere down here, okay, in around the 92, 93 area as a take back, as we come back down into this distribution zone around the CHVN of 92.75. So those are all my hypos. You've got to be careful in these situations because of the fact that we don't have a lot to lean against. Quickly with gold, gold is balancing out. We are right back trading around the composite VPOC 1254.80. We do have this cup and handle that we're still watching for continuation for price up, but with the move up in the indices, gold is not going to spike up right now. It's more likely to balance between the 54 and the 60 area and just chop around in this area. We do have a higher microcomposite VPOC up at 58, so you got to expect some chop between the 54s and the 58s to 60 areas. Above the 60, look for them to come up into the 66 area and that next big target below. The key line in the sand below is all the way down at 46 area, and if we get below that, then we could violate the cup and handle and come back down towards this 1220 area. So that's what I'm looking at. As always, trade well, trade safe, and we'll catch you on the flip side.